Okay, good morning to everyone, and thank you for attending this business panel. I will make a brief introduction of the colleagues that we have here. It's three of the most active investors in the scape of fintech. We have Samar from 630 Ventures. He's based in Amsterdam. 630 is a venture capital coming from the US, based in San Luis. And Samar is responsible for the investments in Europe and specialized himself in the fintech space for the last 7 years. Yeah. Gabrielle, she's coming from Paris. She works in Blackfin Capital, which is a venture capital specialized only and exclusively in fintech. And finally, Vinod. Vinod is from the well-known brand Drop Spirit. He's based in London. He covers Southern European markets, especially also Spain, and is one of the fintech specialists within the fund. No? So the title of the presentation today, the panel of today, is basically what are the best opportunities that we can find or that are today in the fintech space. And the first question that I want to make to our panelists, no, is going one step back, no, and trying to understand not what are the best opportunities, but what are the best or the biggest fears or challenges that the traditional financial institutions have, or has had and will have in the next 5 years, you know, and understand not only which are these, but also if they don't address it, what will happen with them. No? So, Samar.
Right, so I think on the one hand, there are a lot of banks who did work hard in the last 3 to 5 years to create programs by which they can start learning about what's going on. I don't think it's the full-time job of banks to look at very early stage experiments or very early stage initiatives, which are basically venture capital investments or angel investments. But in general, most of the top 10, 20 banks we see as having reached a point where they are figuring out how much is possible on their own, what changes they need to bring in the core of their platforms or their business, and what is possible in collaboration with startups or via investments or acquisitions of startups. So I see a kind of, in most cases, a healthy mix. I wouldn't be too optimistic. In most of the cases, I think they are underestimating what's going on, but I think that's my take right now.
So we are not talking only about banks, I guess, no? It's insurance companies.
Yeah, insurance companies kind of started a bit later. I would say insurance also missed that big bang moment, which unfortunately hit the banks more in 2007 or 2008. That kind of pressure or that kind of lack of lending credit and so on, which sort of created that big fintech bubble. That trigger did not happen in insurance. So, and in general, I guess everybody admits insurance is slightly more behind the curve. So it kind of started later. I would say there is still a lot more to do in the insurance side. I don't think they are as prepared or as far ahead as the banks right now.
Good. Yeah. What's your opinion?
I think banks already started the PSD2 thing, handling open banking opportunities, and that's a good point, I think, for the partnership with fintechs, and provides a lot of opportunities. And I think the big pain points maybe for banks, insurer, or wealth manager, or any financial services player is mostly in the relationship with the customer, the end user. And in this field, there are plenty of things to do, such as claim management tools or scoring technologies. And in these specific fields, I think there are a lot of space to innovate for fintech and to partner for the big banks.
Interesting.
From some of the thematic work we've been undertaking, I've heard this once described to me as that banks are now museums of technology because they have core banking systems that are from the 60s and 70s, and they are unable to replace it because it's so deeply embedded. And so what we've learned is actually that the future of financial services has to be powered by cloud-native technology. And the three core areas for banks specifically right now are in payments, core banking systems, and fraud.
Sorry?
Fraud.
Fraud.
The one that we've seen kind of the two areas where they've seen a fair amount of traction is specifically in payments and also in core banking systems, where you've got probably about 7 or 8 players in Europe who are making some progress. But again, the debate has always been, how do you replace mission-critical software? Because you will almost, if you were a big bank, a tier 1 bank in Germany or in the UK, touching your core banking systems would mean touching millions of customers, which would upset the regulator, and so suddenly you have systemic risk. So how do you do that in a way that doesn't upset the system, still works, and then enables you to stay relevant for the future? That's a big question.
So your opinion, because one of the things that it comes to me when I talk about fintech is if fintech is B2C or is a system things, no? And you are more of the opinion for what you're saying that is more rechanging, reupsetting all the systems to the traditional operators, or do you think that it will be more of a B2C space in where traditional banks or insurance companies will disappear and there will be new players that will be the one facing clients?
I think branch-based banking will possibly disappear in most parts of the world. But I think the question is also, it's not one or the other. It's not sort of winner takes all.
Yeah.
Winner might take most in a particular country, but the market is huge. And there are over 1,000 banks in the world. So whether you have an incumbent or a fintech like Revolut or N26, there's plenty of space for both to coexist.
No, thank you. Taking that responses that you kindly share with us on what are the challenges for banks, the next one is, are these the best opportunities for fintech investors or not? Because in my opinion, not necessarily could be correlated, or they could, no? But
sorry,
go for it.
And it would be great if you can show, also share with us in the space that you think that there is these best opportunities, and if they correlate, examples in where you maybe have invested and why they're doing well, no?
So I'd say I'll also put on a bit of the looking at European innovations and startups and so on from the US hat as well. I think there are 3 big rocks or 3 big areas of opportunities. One, definitely the one which you shared, the opportunities around the entire legacy 30-year-old, 40-year-old platforms, and how do you move from them to newer ways of doing business by mobile, without branches, etc. The second big one, I think, which is very special to financial services, is that it runs across sectors. We see a lot of opportunities which are net new opportunities, so which were not existing until a lot of the IoT, blockchain, mobile technologies came in, where financial services is the only sector which tends to run through pretty much any other sector, whether it is retail, whether it is airlines, whether you need to move money. Yeah. And I see a lot of the companies which we now start to look at. So you can't call them ad tech or retail tech companies. They are actually, or digital health companies. They, let's say, provide digital health, but they actually depend on health insurers for their business model. So is that a fintech for us or an insurtech for us? It is, of course, because it's kind of flowing through the financial services system. So I see that second opportunity, the second big rock. And the third one, I think, again, from the US angle, there are a lot of trends which are very Europe specific. Some of them right now look like a pain, but some of them are the likes of regulatory restrictions around privacy or GDPR, open banking, which was again very consumer facing but not so good for the banks themselves. All of these are things which are happening in Europe first, but where US and the rest of the world are watching, because that's the way to go for a lot of them. And I think a lot of the banks or startups do not realize that what they work on now could become later the global standard or kind of move to the rest of the world. So we see that third part as also a big opportunity where regulation and market conditions or the way the European Union thinks is driving innovations in a way which could become state-of-the-art later.
And free commercial spot for which are the ones that you are most successful in?
Right, so the first thing is, I think the first one, let's look at the second one, probably the one around interface between sectors. So there's a company called Sonect. We invested in last year. It's basically using retail. If some of you know Nick Comnical, I think it's one of your investments as well. So it's kind of trying to create a model where all retail kiosks can be turned into virtual ATMs. So you go with your mobile app of Sonect and you're able to withdraw or deposit cash in any retail outlet. So it's at once addressing the pain of banks who want to do away with ATMs as far as possible, and for retailers offering a very good way of saving cash handling costs. They don't want to keep money in their vault in the branches. They just want to serve their customers, and provides then the data to banks as well. So yeah,
Thank you.
that's an example.
Gabriel.
I think all of these bring different trends of opportunities. For example, on the fraud sector, there are many things to do. As we have more and more payments and any kind of flows and data, more and more data, you can easily score or find new ways to detect fraud. And in this field, we invested into a company called Ravelin, based in London. And Ravelin works with Glovo, for example, and with many on-demand economy players or retailers. And they detect fraud within payments process. So, and the scores are very impressive because there are more and more fraud on these fields. So I think the data and AI enables all this field to grow. Yeah. And there are other opportunities, for example, in the, we really like insurtech space. And for example, we invested into a parametric insurance solution called Descartes Underwriting. We did the seed round 1 year ago, or less than 1 year ago in France. And so basically, it's a solution based on weather-based data to trigger the claim management. So it's very powerful and helpful for the insurers to use this kind of broker and for this kind of new solutions in order to handle the new risks and to better manage the customer relationship at the end. And yes, we are very interested into the field of wealth management too. I think there are many things in Spain to watch in this field, not only in B2C model, but in B2B2C model. We were talking about robo-advisor.
Finance, for example, is a very good one, yeah?
Yes, for sure. And yes, these are kind of fields that are hot for us.
I guess of the themes I've mentioned, we've made one investment in payments in a company called Form3, which is a play on the future of Form3. Yep. So the FORM and number 3, which is basically software that is cloud native, hosting access to all the faster payments networks in Europe. That could be SEPA, SWIFT, faster payments in the UK, BACS in the UK. So these antiquated access systems are now being slowly hosted in the cloud. That is a trend that we're seeing, and we made a play. In core banking systems, I think there are a couple of interesting European companies. So there's one out of Ireland called Leveris. There are a few out of the UK, one called 10x, another's Thought Machine, another's Griffin. And in fraud, the one that Mambu out of Berlin. And in fraud, as Gabriel mentioned, Ravelin is really interesting. I also think Frogster, which is its competitor, is also really interesting. That's kind of some of the things that we've been looking at of late.
Good. Thank you. So, I mean,
yes,
please.
Maybe another space that is quite hot for VCs, I think, is all the financial services related to SMEs, because SMEs, you have plenty of new SMEs every year, and so you have
hard to manage from the bank,
opportunities for new players to get the market, and for the banks and insurer, it's hard to find a way to have a B2C consumer experience such as Revolut's one and Binext one here, and so on, to take this kind of smooth experience and to bring it to SMEs. So SMEs have new needs and new standards in terms of user experiences. So we think it's a very hot space too. We invested, for example, in Agicap, which is a cash flow forecast and management solution for SMEs. And when we are talking about SMEs, it's not only startups, as we see every day and hear everywhere, but most like traditional and low digitized SMEs. I mean, the market is huge, and internationally speaking, it's a huge.
I totally agree on that. So I was running my own company for the 7 years. In the first 5 years, basically none of the banks, the usual Commerce Bank or Postbank and so on, would not even touch you until the first 5 years, no matter what your revenues are. And I think on the one hand, we talk about all the VC and the big funds which are getting raised, but there's so much bloodshed in that first 5 years of the startup or SME sector that if you don't have solutions for either lending or for factoring, so many of them die just because invoices are not paid by big corporates. I think that's like a big opportunity.
Agreed. So thank you for your answers. I tend to agree with most of these hot opportunities you raised. No? I have a final question. I'm a VC investor myself, so I know the answer. So I will not allow you to give those answers. No? And I know that every VC investor or every company that is looking for a VC investor, the first thing that they hear is that we VCs invest in teams, no? And in people. No? So people is not an answer that you can provide to this question. Yeah? Non-capital, because in my view, we're talking about fintech. So if there is a place in where we can find capital, it's in the financial sector. So I mean, yeah, we can raise, I don't know, 100 million, but Banco Santander in Spain have much more than 100 million. So that's not a competitive advantage, in my point of view, raising a lot of capital when you're competing against a bank. No? So if we exclude people and team, that we know is the most important thing for a second, no? But let's concentrate in fintech and capital. What do you think these fintech opportunities in where you are investing in need to be successful in a hard fight against Goliaths, no? Which are these museums, but they are museums or dinosaurs that they are very powerful, and not only because of capital, because they are in a regulated environment, they have lobby capacity. So what do you envision these companies need to be successful?
I'd say that, I mean, the next obvious answer is actually traction, but let's say we park traction. It is that if you are thinking about being in a certain space, that you understand the dynamics of that market. So the team and the money is all good, but if you don't understand the dynamics of how, say, for example, the back end of banking, that is a 2 to 3, maybe up to 4 years sales cycle. As a venture capitalist, can you really take the hit? Can you wait 4 years for them to burn cash to win that one big contract? But that's the nature of the game. That's how buying cycles work. So it's understanding the dynamics. And the second is understanding whether or not you're selling into a niche or you're selling into an uncapped blue ocean. And that's not obvious when you do the deal. And I will say that, having done Form 3, it wasn't so obvious that the opportunity was that huge. But as it turns out, it is huge, bigger than we thought it was. Mm-hmm. So it's having that open mind of actually thinking about what might be possible. A lot of what happens at investment committees, at most VC funds, is there's debates, right? And so we tend to think about there'll be a group of people who will think about all the things that can go wrong, and that's their job. They have to play devil's advocate. But on the side where you're actually trying to do a deal, what you're trying to think about is what can go right and how can you make it go right? Because everything in the world can go wrong. Like, the founder could get hit by a bus the next day, right? So it's thinking about these two things that I think enables you to make better decisions.
Do you agree? Or what do you think?
I would just add, given also, we fund, a lot of the companies we fund are from the angle of the business development, go-to-market strategy, and we focus a lot on that after the investment as well. Kind of were born also from that perspective in terms of helping with business development. I think most of these startups, whether B2C or B2B or B2B2C as the next one, they underestimate the opportunities around channel partnerships, around partnerships in general, and a lot of them have a kind of black and white view of, okay, this is the path, we have to make it as a B2C, but it doesn't work that way. I think a lot of them underestimate the potential of the correct partnerships at the right time. I mean, Revolut until day before yesterday was one big B2C disruptor, but they partner with Visa as well. I think all of the last few successes in fintech or even otherwise, I think a lot of the timely partnerships can be a very, very useful tool. And I think that's another thing which we look at. How do you go to market via partners? How do you go to decision makers which are different from the current crowded decision makers? How do you scale now in partnership with somebody and then decide 3 years later if it's becoming a competitive one, then pull it off, go ahead and do something else. But I think that is something which we look at. How are you planning to go to market?
Because to that thing is, do you guys think it's more a question of brand or product? Because some people challenge that if it's a question of brand, because people want to deal with their finances with brands. Brands take a lot of time to be built, and if it's a question of product, then you don't maybe monetize all the value.
I think at any point in time, growth. In the first 5 to 7 years, I would go for growth. I don't think anybody is looking at a brand, and that's why I say there's so many examples of companies which started B2C, but then realized B2B2C is a better model. You can scale better without fewer sales costs or marketing costs in particular. And I think it's always growth. Brand is fine. It's probably a good tactic, but yeah, we kind of tend to be more. How can you start making money earlier rather than how can you eat more venture capital money? That's our mindset.
And in addition to that, I think people is very key. And as we invest, when you invest at seed stage, it's a big stake. And we are used to ask another question within the team when before investing is that do we want to be partner with this person for 10 years or no? Do we want to work together, and are we able to speak to each other, to understand each other, and to grow together? And I think sometimes you say, I'm not sure, I'm not confident with this person, I'm not sure he's a good CEO for such the ambition we share.
Remember that I excluded people and capital.
Yeah.
But
I wanted to speak about that because I think it's a very important
Sure,
topic
I totally agree.
as we speak about seed stage and Series A stages. And about other criteria, we are looking at, of course, the product market fit and the traction you have, but everything has already been said. We are asking within the team to assess the opportunities. How could we help this company, and what are our strengths and their strengths, and could it be complementary? And for example, our networks of banks and insurers could match with them.
Alfonso, I know you excluded the capital question, but I do think it's worth talking about, because the irony is that we have lots of entrepreneurs who are pitching VCs, and VCs are also competing to get into good companies. And so we sell the ultimate commodity, which is money, right? All of us here on stage have a fund, and we're investing out of that fund. The question is really what kind of money? And so the kind of capital matters. And every, like Blackfin is well known for fintech. Draper Esprit is a legacy from Silicon Valley, from Draper Fisher Jurvetson, and also we IPO'd the fund, so we're investing on balance sheet. Samarth has done lots of interesting deals. I think that story that the entrepreneur buys matters. Who do you want on your board? Why is this money different to another?
Don't get me wrong. I totally agree, but I wanted to basically focus the answer on fintech, because I know what is required for a company to succeed on the basis, and what a VC can do for that company, which is what you are saying, But what I experienced myself, on the VC space, on the fintech space, is that having all these things on the table, which is a must, it's a more challenging environment than competing in clothing, or in industries that are not as big or as regulated, as intensive in capital from the traditional people to be disrupted, and that requires, in my point of view, more tools than the ones that obviously are obvious, which are super talented people, on the entrepreneurship side and also on the investor side, to help them to be successful. That's why I was asking, for example, if it's a question of brand or product, because if, for example, all these neobanks, the reality is that the product is a commodity, it's a question of brand, but building brands requires a lot of things, including capital, and time. So that's why I was asking what your view on that. I think we ran out of time. I don't know if you want to make a 30 seconds closing remark or something like that, and we'll leave it there for the next panel.
No, I think looking forward to the interactions with a lot of the startups here. Would love to understand as well from you what's going on in Spain, what's special about the fintech scene here. But had a great time. Thanks.
Thank you.
Yeah.
Nothing to add, really.
Thank you very much for attending, and hopefully you enjoyed the panel.